Welcome to another edition of Rebellion's educational series. Today we'll be conquering sustainable investing for everyone. Interesting book written by my friend here, Paul Bryant. Paul, thank you so much for coming on.
Thank you, Alex. Great to be here. Nice to talk to you again.
Sustainable investing is one of the hottest trends in Wall Street. Whether it's institutional investors at Goldman Sachs or Morgan Stanley, or day traders at E-Trade and Interactive Brokers, you're seeing capital that's demanding allocations to industries that are behaving well, that are practicing sustainable investing, that are practicing responsible footprints. Tell us about this book. What are we going to learn from it?
Yeah, the key things you're going to learn from it, I think, Alex, is it's written for the private investor mostly. So those of us who manage our own accounts, buy stocks and shares or mutual funds on our own, or those of us who use advisors, we're going to learn that we can make a difference to corporate behavior and channel capital to the most sustainable companies. And we can improve our investment returns by doing so. And it's not that difficult to do from a process point of view. So those are the three main bits of the book. So what I've called the subtitle there is Make a Difference, Make Money, Make a Start.
Is the data there so far in terms of indexes with sustainable investing practices versus those without?
Definitely. There's a section in the book which compares, it's a snapshot, which I took the biggest general equity indexes, the S&P 500, the MSCI All World. I compared those to a series of sustainable indexes. It's interesting. I took a 5-year view. I did it up to the point pre the Corona crash. I did the Corona crash itself, and then I did a 5-year up to the end of the Corona crash. And in all of those, the sustainable indexes were significantly higher performers than general equity indexes.
So yes, that's really what Rebellion has looked at the issue as well, and we've seen that there has been outperformance for that. And a sustainable investing product that is driven by our AI is something that we've been working on as well. And we think it's the demand is there, whether it's 20-year-old beginning investors or 65-year-olds. The demand is really there. I think it makes people feel better, and they're seeing that there is outperformance. The press is starting to report on this. But your book, it has a few parts. Let's go into the various sections.
Yes. So the first part of the book is called Make a Difference. So really where I'm coming from there, Alex, is I kind of take a look back at some of the history of capitalism, and there's seminal moments in that history where, Adam Smith's invisible hand doesn't work all that well. At a time we had to step in and stop child labor, for an example. We had to stop companies polluting rivers, those kind of obvious examples. And we kind of act, I believe, one of those points today, where we have to address the climate change and get companies to behave in a way that addresses that problem. There's the social side of things, inequality in our societies, and then the governance side of things as well. It's just one of those things which has to change, from paying taxes, those kind of things.
I'll say I think it's more beneficial, whether it's going to be accepted or not, to use the term pollution over climate change. I feel like climate change has become a bit of a lightning rod in the political circles. We don't talk about politics here, Rebellion, but pollution, I think everybody wants to pollute less. And whether people accept that the planet has been hurt by what we've done and that we can make the planet cleaner. I'm an avid scuba diver, and so the destruction that has occurred to our oceans has been tremendously upsetting to me as a human being. And so if we can push capital in the direction of firms that do not pollute our oceans, that's going to make a difference.
Absolutely. I mean, that's 100% right. And the difference of this moment, Alex, to what I've seen previously, some previous things were driven by regulation, such as extreme forms of pollution, which we saw in the past. But this change today is being driven by capital markets. Regulation's way behind. You probably the most advanced regulation is in the European Union at the moment, but even that, it's not executed yet. There's delays through corporate lobbying and politics. Capital markets are driving this, and what's fundamentally behind all of that is demand from investors. They want their asset managers to apply these filters and think about these lenses when they invest their money.
But I'm curious, where would something like a tobacco company fall, according to your book? Would that be a sustainable company, or would that not because it causes cancer? I'm just curious, or do you kind of take a pass at that?
Mostly not. But one of the themes of the book is that there is no hard and fast rule on what a sustainable company is. It's different things to different people. So yeah, the example I give in the book as one of the more nuanced views is look at an oil major. So a fossil fuel, polluting, yes, we want to use less fossil fuels in the future for the sake of reducing pollution. But these companies are also some of the largest investors in renewable energy.
That's
so
true.
What is an investor to do? So, there's shades of gray. And I spend a little bit of time in the book encouraging investors to think about that. What is sustainable investing going to mean to them? It's going to mean something different to you. It's going to be a little bit different to me. So those are very personal decisions.
Very, very good points. It's really shocking how much of the the green movement is actually being funded by Shell, British Petroleum, ExxonMobil. They're absolutely, I know ExxonMobil did a huge national advertising campaign to, flout how they had come up with an algae that could create, they could create ethanol out of an algae. And, but work like that is going to appeal to the next generation. That's what we're seeing. And that, that next generation is very much rubbing off on older investors as well.
Oh, very much so. Yeah. Funny, it was one of the early sort of triggers of my idea to write the book. So I'm an investment analyst. I write investment research on asset management companies for mostly private investors. And fielding calls from a few investors, it kind of dawned on me what we call fairly sophisticated investors from a financial point of view had an incredibly basic knowledge of what that sustainability lens is, ESG investing is, what it means. I thought, wow, there's
for our viewers, do you want to say what ESG stands for?
Sorry, we haven't mentioned that. Yeah, so the sort of corporate jargon, Alex, environmental, social, and governance. So they typically split sustainable investing, or responsible investing is another word you commonly hear, into those three buckets. So the environment, the social side of things, where we're trying to address social inequality, treating the workforce and communities fairly, and then the governance side of things, where companies are well.
So what do you do then with a company that might be innovative and their product might be fantastic, sustainably speaking, but at the same time does not treat their workforce well? Or is that not something you've seen yet?
Oh, it's absolutely what we've seen. Yeah. What's a good example of that? I mean, what we're having is a number of, so pure finance, we see a lot of ratings agencies. We know about S&P and Fitch, Moody's, these kind of companies. What we're seeing now is a lot of sustainability ratings agencies or data providers. It's quite a flourishing industry. So the bigger ones out there would be companies like Morningstar, MSCI. They do a lot of this. And they make information available to investors, some really good tools which are free of charge, which you can go and drill down into. I was having a look at one of them this morning. You go into a company like, I'm not picking on anyone, but like a Tesla. So, strong on the environmental front, and obviously the headline, electric vehicles, great, this looks good. But a number of those ratings providers mark them down quite heavily on their treatment of employees for various reasons. And I think the point to investors is go and look at those tools. There's a guide there, so go and dig a bit deeper. What does that mean? So what have one of those ratings agencies found? Is it valid? Go and have a look under the surface yourself as an investor and make your own call. Is that a company you want to invest in? Was it just not such a big deal to you? And does it outweigh some of the environmental benefits you might get from a company like that? So that's as an example.
Well, it's done so well. It's the best performing stock.
Exactly.
Up
Yeah.
10 times. It's breathtaking returns this year.
It is. Yeah.
It makes you wonder about the correlation historically of innovative companies that treat their workforce badly. Maybe there's unfortunately a sad but positive correlation with performance, because you have genius direction mixed with a very Scrooge-esque managerial style that is an eye on cost. I'm not saying that's the ideal from an ethical or moral perspective. I'm merely speaking from a price performance perspective.
No, exactly. Yeah. I think everyone agree. A company like Tesla is an outlier. It's hardly typical.
It is very much an outlier. If there was ever an outlier in life, Tesla would be
yeah. Yeah. But yeah, there's a mix, Alex. And I mean, some of the companies like a BP, British Petroleum, which you mentioned earlier, they've been managing these balanced scorecards of environmental, governance, social issues for a long time. They're very conscious of it. And on average, some of them score very well. But at the end of the day, they're a fossil fuel provider, and many investors are saying, no, I don't want to invest in that. That's off my list.
No, it's tough. That's very tough, especially considering that we're going to use fossil fuels for decades to come. So yes, these companies will spit off profit, but how to look at that, that's a very tough issue. But another reason to buy your book, I suspect.
Yes, it gives you some ways to think about it, what to analyze, and then where to look for information on how to analyze individual companies, how to analyze investment funds through a sustainability lens.
Well, fantastic. Well, this has been a lot of fun, Paul. Before we conclude today's episode, I'd love if you had some parting thoughts for our viewers.
Yeah, sure. I think a good starting point, I've tried to boil this down into something simple. So go and have a look at your existing investment portfolio. If you invest in stocks or in funds, it doesn't matter which. Take your top 5 holdings and go and have a look at those through a sustainability lens. Have a look at some of the sustainability scorecards which are out there, as I said, freely available. Drill down into those companies, see how they score, how they perform. Go and have a look at your mutual funds. What are their top 5 holdings? Are they companies you're comfortable with? So it's an easy task to start. The information is out there. And as you get more interested and take this even more seriously, then you can drill down even further, get into more detail with companies, look at the wider angle of your portfolio. But I would say that's the parting shot. Go and have a look at your top 5 holdings, whatever it is, whatever you've got time to have a look at. Spend 15, 20 minutes on each one through a sustainability.
But should they read your book first, or should they look at their stocks first?
Have a read of the book. It's a short book, 160 pages, won't take you long. You'll get, and the third part of the book is really a how-to, Alex. So it talks investors through, right, start this way. If you're a stock investor, here's some ideas on how to start. If you're a mutual fund investor, go and have a look at these rating tools to see how your funds are performing.
Wonderful. Well, this was a great talk, Paul, and you stay safe during these crazy times.
Thank you, Alex. Nice to talk to you.
Thank you so much, Paul Bryant.
Okay.